This is Tom Aspray with the Viper Rocket Wrap video for the week ending August 22nd, 2025. With Friday's actions, this is how many investors felt as we accelerated sharply to the upside, showing impressive gains for the day in most of the major averages. On Friday, the IWM small cap and the Dow Transportations led the way higher, both up close to 3%, or for the Russell was up 3.4. That's about what we did for the week as well. Some of the broader averages, the New York Composite did it well, up 1.7%. Industrials up 1.5. Gold was even up 1%, while the S&P was only up 1/3 of the percent, and the NASDAQ 100 was down 0.9%. Clearly, it was not a growth-led rally. So in today's video, we'll look at what's likely ahead going into the Open Market Committee meeting in September, and whether these investors should really be riding that rocket ship or not. Looking at the weekly charts of the S&P or SPY, you can see it closes barely back above the yearly R1 resistance at 641.98, now minor support. Stark band's up around 270 or 670 rather, and the R2 at 695.52. As you'd like to see, all the AD lines also made new highs last week, barely by the S&P, but you know it's been very positive since the pullback in April as we dropped to the lower Stark bands, but the AD line was much stronger. That indicates that, you know, internal strength, even though prices were plunging. Stocks only AD had been lagging for a while, but it turned in a nice strong performance last week, pulled back to the moving average before closing strong. Similar for the NYSE All AD line. It was an interesting week. This daily chart shows that the SPY came down to test its 20-day moving average, sort of classic, held well above the pivot, and then closed strong, suggesting the next move should take us to 652, if not higher. Looking back on this chart, April 30th was kind of things turned around. You know, the S&P AD line broke out above resistance. Stocks only broke its downtrend here, line C, and similar action in the NYSE. Pretty much all moved strongly higher, though on a daily basis, only the SPY and the NYSE all made new highs. This does look likely for the stocks only, as it's broken its downtrend, but it's still below the highs we made last month, so that'll be a measure to watch. Things were not so clean for the QQQ. You can see it drop down to its pivot and actually reach the Stark band on Wednesday before closing strong. So it'll be challenging the highs at 583.32, possibly the R2 at 591.40. The AD line, you know, is back above its moving average, but below its resistance. At the start of the week, my comments suggested that growth was ready for a pullback, nap, or just a rest. That was based on the technical studies. You can see this performance chart, you know, well extended on the growth side. Of course, you can go to my articles on Forbes.com, see everything I've written in the past, I think, past several weeks or more. At that time, the Q's AD line had not formed a new high, so that's why I was cautious, and we were up near the upper Stark bands. So, you know, also looked at the long-term growth value, might be something you might want to read. So let's look at the Q's. Well, the weekly chart shows that it was lower, and you know, we're coming into, you know, it's bumping into the R1 here at which we've been talking about way back since here, I think, 573, and it hit, you know, 572.08 was the R1 on a yearly basis, and the high was AD line is positive, but has not yet made a new high on a weekly chart, and the RS, you know, had been outperforming the S&P since here. Now it's very close. If it doesn't outperformed the S&P this week, it could drop below its moving average. The daily chart of the Qs gives you a little more accurate show of what's going on. You can see we had a high here on the 12th, or on the 13th rather, and down below here the daily AD line formed a lower high. So we're in this trading range. We closed back above its moving average on Friday. So are we going to break out above this resistance or break down below these lines? If we do that, then we could drop back to the support in here, but it wouldn't change the long-term positives for the Qs. You can see the low here at 558.84 is the key support, and we closed, as I said, just above the 20-day EMA at 568.85. The RS has dropped back below its moving average and is getting close to the uptrend line D, but really does not show a completed top formation at this stage. So we'll keep an eye on it and keep you alerted via Twitter. Of course, the rocket-like activity on Friday was based for many on the fact, or the assumption rather, that the Fed would lower rates in their meeting, on August or September 16th and 17th. Powell didn't promise that, but he indicated that was leaning that way. That was enough for the buyers to step in. So we got about 4 weeks before that happens, and that could be tricky. Certainly if he doesn't, based on probably we got a jobs report, we got the PCE report this coming Friday, lots of stuff to shake it up. But overall, I think we're going to rally into that meeting. You can see this chart of the Qs shows the sell signal, to 224 on the Qs on a weekly basis. You see this arrow drop below the Stark bands, 4 weeks during the decline, very oversold, and then flip back to positive here on May 12th on a weekly basis. You can see this is another one of Jerry's interesting creations, a modification of the RS and volume. So it turned positive back here on April 28th, a week ahead of the other buy signal. The volume here is still positive. If you use Fibonacci projections and you look at this decline from here to here, the 127.2 resistance level, so that this decline will be above the 100% level here and get 27.2% higher than that. That's actually a good, what I often use to take profits on long positions is for selling half at that level. If we expand up other than that, you can see the 161.8 is at 632.89. I think for the Qs, that may not be attainable right now. Probably will be later in the year or in early 26. Looking at the SPY, you can see the 127.2 target is at 645.50. We also have some, pivot resistance here at, higher than that. And of course, the 168.1 target is at 697. Certainly, you'd think that if the SPY made it up close to 700, most bears would have finally gone for an early hibernation. Technicals still positive on the SPY. You can see the volume action is strong, and this obviously the insight is not relevant, but so looking pretty good here going forward. There was a nice surge in the number of new highs in both the NASDAQ Composite and the NYSE, 374, so below that last peak, but no warnings yet from the new lows. NYSE Composite, 193 new highs, just below that prior peak, but still shows a positive trend. And once again, the only one new low, that's obviously a good sign. No warnings from the put-call ratio. Obviously, we had moved a little bit closer to the 1 level prior to Friday's stuff, and that will look to be covering those out. So they're pretty much neutral at this stage. The VIX and VXN analysis, we flip back again below their moving averages. So we've had a bunch of fake outs here. That likely will lead to a correction at some point. as those that are burned on these bounces in the VIX and the VXN will probably not try it again. So that's probably what you need to see, correction that is indicated by the VIX or the VXN analysis. So stay tuned. The buying was strong on Friday. You can see 70% of the S&P stocks were higher. S&P 1500, 82.53%. NASDAQ did pretty well, 62%, but you can see it was below this peak here, which is around above 70. The growth value ratio dropped sharply, made a new high in a breakout, and so that'll be interesting as value outperformed growth last week. Still looks positive chart, so we look for we could pull back to this 20-period EMA. MACDs have started to hook down. Don't really show a normal top. I mean, we have lower highs in the MACD lines, but not really much of a divergence in the histogram. So we'll keep an eye on this. We still think that pullback in growth is likely to be, a buying opportunity. Let's look at the weekly charts now, or the weekly. Let's look first at the big picture. There were a lot of improvements in the sector analysis. You can see XLE, had been pretty much, weak in May, back and forth, up to 83.3. So that's an encouraging level. We'll probably discuss crude oil in Monday's reports. XLB also 83. We look for above 50%. So XLI, we took some off the table here. The ETFs holding up, but this suggests that the internal components are weakening. XLY still holding firm at 80. XLP, was in really, neutral to negative for most of the last 6 weeks, starting to improve. XLV suggests that is a real low in healthcare. XLF had a very sharp rebound, 36 to 34. And then, of course, XLC, one of our favorites, 81, 25% in the XLK. So that's something to watch at. In the ETF weekly report that we sent out later today with video, you can see that 90.1% ETFs closed above their pivots. New positive weeklies in KRE, PSE, which is a small cap healthcare, as well as an interesting mix of stocks, including the VNQ and the XLRE. Let's take a look at that. You can see the new weekly buys here. It's regional banks, transportation, IYT, Dow Jones REIT, low volatility, USMV. That might be an interesting some to check out for the week ahead. VNQ, another REIT, and materials, and then of course the XLRE. As I've been mentioning for a couple of weeks, the big worries hanging over the market are the fact that 90% are above their quarterly pivots, so not a lot of room based on this for the upside. Plenty of room where you wouldn't be surprised to see this number drop below 80. That and the very low cash position amongst the FMS global survey, down below 4%, that for more than a few months. So we're watching that, but growth strong, 100%. Value at a good week, also 100%, and you can see that a big change in the daily DTS with XOP and XLF flashing daily buy signals on Friday. XLB had generated a weekly last week, as did the KRE, and the KBE, I think, is in this list. It's already positive. So this indicates the leveraged ETFs. So we have positive on the TQQQ and also on the QID. This is the SQQQ rather. So that's interesting. And if you look down at the, that's confirmed by the daily negative on the TQQQ. So a mixed bag there. There were some interesting developments in the sector report here. Little different scans, so only 76% are above their quarterly pivot. Interesting RS developments. So let's look at energy. You can see it's turned up. It's just closed right at its declining slow moving average here. But if you draw a line across all these peaks, looks like crude oil may finally be bottoming. Materials turn positive. In other words, fast back above the slow. Industrials, they got a big breakdown. So, was this just a correction, or is a top being formed? Too early to tell. A bunch of these, however, do appear to be bottoming. So XLY, moved above this previous peak, and looks like a bottom formation here. Even more prevalent in the staples, which nobody likes, which you can see higher lows and then move above the intervening peak. Also for healthcare, it's been in the doldrums for most of the year. Now looks like it's probably changed. Financials haven't had a nice rebound, so back above its moving average. Technology, so if this is a major top, you'd look for this to go up to the declining fast moving average and then drop lower. If this is just a correction, you'd look for a strong move in the slow back above the fast and be off to the races again. Communications, also XLC looks positive. Utilities, nobody likes them, but they still look great. You can see they drop back to support, move back above the moving average, and even the real estate REITs, VNQ, are starting to show some life here. So you can see in the individual scans, CCI, EQX has positive daily, VICI has a 3-day, and already the weekly is already positive. So that gives you some things to look at on a bunch of nice charts in the utilities still. So there were, dailies in SRE and D, and so that's we'll be watching to see if WEC, PEG, and ED can see some positive momentum. Pretty much now they're 4-hour to 3-day is negative, so look for some 4-hour pluses and daily DCSs to say that their correction is over. And real estate, yeah, it's looking pretty good. Also posted on Forbes on Wednesday was understanding market corrections to invest smarter. I know many of you, if you haven't been following my advice since the April lows, are probably a little frustrated if you haven't got in. Right now I don't think it's probably a great time to add in the ETFs. Why? Well, you look at above their moving averages, like the 20-day, they're all showing 3 to 4% gain above it. So that's your slack. That means if you were to buy on Monday's open, the odds do suggest that at some point in the next several weeks to a month, we'll be back to that 20-period EMA. It may have risen, but still your risk will be better contained. So that's what I would use to gauge that. Also takes you back to the buy signal, in April based on the AD line analysis. Stark bands got really oversold, and the sentiment in terms of the AAI, the bulls picked up last week, so I would look for another higher number in this coming week, and that'll make the difference between the bulls and the bears turn back up. Still looking for a move into the 30% range before the rally is over. Well, that's all I have. Go to viperreport.com if you'd like to sign up, and as always, send me your comments, questions, criticisms to tom@viperreport.com. Thank you very much.